Hello traders, and welcome to another weekend's market forecast video. Hopefully everybody has been having a great weekend so far and ready for the next week of trading. So let's see what do we have for this week ahead. First of all, starting with the dollar index. Last week we have explained when the market was over here that we have expected a small pullback with another push to the upside before a big move to the downside with CPI, and this is exactly what happened. Then with the FOMC, the market overreacted to the upside, and now the market has reached another extension area over here, which what is doing from here, it's a complex correction, something like this, an expanded bounce in this corrective structure, and we are expecting the market to start give us signs of weakness. Here is the 4-hour chart. And we do not expect another high above this one. We should start getting a reaction to the downside from this week onwards. Alternatively, we might get a small pullback for another high, marginal new high, before we move to the downside again. So this is our bias for the dollar index for the upcoming week. For the dollar again, last week the market made the move lower, then another move up, and now is starting to reject and trying to move to the downside. As we have explained, anything over these levels, we are not chasing this market higher. It is expected to give us a move to the downside most probably. However, it can also keep extending like that, pull back up for some time before it really moves. So this is why we do not really like to get involved with the dollar again at this stage. It's only creating some moves for scalping purposes. Other than that, we are not scalpers and we are not risking our funds in scalping. This is what we explain to our members, and we only trade clear setups with good risk to reward ratio and value. So regardless of the case, for the dollar yen, we are not interested to trade it at the moment, with the overall bias still remains to the downside for the next bigger move. Euro dollar, as we have explained last week, we expected a little bit more upside for a reaction. We have got the reaction with the CPI, and then the market went down again for a double correction from the highs from 4th of June. And overall, we can still get a little bit more downside. We don't really have to. It doesn't have to reach this area. It looks like it's going to start with the opening of the week and give us a push to the upside, and from there give us at minimum a bounce to these highs of 108,400 area. So we are not interested in selling euro dollar. It's only better to look for buy setups at this point, with the bigger move remains to the upside for now. For the pound dollar, we have got also a new high with the CPI reaction to the upside as it was expected. So the cycle from these lows from April, it looks like it has ended, and this was a pullback. For now, we can see that the market should be getting ready for another push to the upside. Alternatively, this one can spend some time doing that before it goes up later down the line. So regardless of the case, for the pound dollar, we are overall biased to the upside, and we are not going to be interested in selling the pair at all. For the pound yen, we have expected after this bounce to see a move to the downside. The market made a fake out to the upside and then it started to move lower. So perhaps we can start the week with seeing some consolidation over here before we see the move to the downside. We are still biased overall for one reaction to the downside for the pound yen, and we do not like to chase it higher at this stage of the cycle. Alternatively, it can waste a lot of time here doing something like that, and then at some moment it's going to break to the downside like that before anything else takes place. So this one is very risky for chasing it higher at this stage. We are not interested for any buy setup for this pair. For the EURUSD, what we can say about this pair, we have been forecasting this one step by step since the beginning of the year. We have forecasted this move to the upside, this pullback from here to the upside, and from there we have expected the market to react to the downside. This was a bounce, and we have also explained that from here we expected more downside to take overall. You can go and check our oldest video and you can see that we have been saying about selling only this pair since these levels over here, and it has been moving down and down and down. We can still see more downside at the moment. The cycle doesn't look like it's going to be ending anytime soon here. So perhaps we might get some consolidation here, but ideally we need to keep moving to the downside. But as you can see, this is a corrective, it's a corrective cycle, so it's not really ideal to be chasing it lower and lower. The best value for sales was above 165. So now this was a 500 to 600 pip move already. So the cycle is getting mature and we might get a sideways period in this pair. But regardless of the case, we are still biased for more downside in the EURUSD. For gold, as we have been explaining over the last week, we expected from here to start getting a move to the upside. So this is what the market is currently doing, is getting ready to move to the upside. And we are only looking for possible buy setups in gold. If there is any good setup, we will consider taking it, but we do not recommend overall to sell gold at this stage. We can still see more upside to be taking place. Perhaps it can also consolidate a little bit here before it starts the move up, but we are overall biased for more upside in gold, still above these lows from the 3rd of May over here. For oil, as we have been explaining, we have expected from these highs to see this push to the downside. Now we are getting a corrective bounce for the time being. We can see a reaction to the downside should be taking place. And then we might get another push to the upside. It's not really necessary, but this is what we can see for the time being. But the overall bias should remain to the downside for new lows in oil in the bigger picture. So our overall bias will remain bearish, and we are not interested to buy oil at these levels and this stage of the market. It's been a while since we posted for natural gas, but since some people have been requesting, we will make a forecast here in the daily time frame. This is the official price feed data from NYMEX, the official exchange that provides the natural gas futures. So we have expected this was a weekly Fibonacci extension area of buyers, and we have been explaining to our members as well that during these levels, this was a great price and time for someone that can find any possible ETF for natural gas for a long-term investment for the next 2 years' time, let's say. But for trading, this was not the right timing because here we have seen a fight between the buyers and sellers, and this one took, I would say, about 2 months up and down move over here. Then we finally broke to the upside. We have explained over the live sessions to the members after this pullback, we expected another high. And now what we can see in gas, it's going to be a period of consolidation. So the market can do a pullback and overall it can remain choppy for the next 2 months time if it wants to. So we don't really see anything specific for trading wise for gas. It's going to waste the summer, I would say, within this range before anything else can take place. So that's our view for natural gas. It doesn't need to trend at this stage. It needs first to absorb these prices down here for some extended period of time before it can create a bigger move to the upside much later down the line. For Bitcoin, we have got a pullback here to another Fibonacci extension area. As far as we hold the lows from the 1st of May over here, which is the major support area we have for Bitcoin for the short-term cycle, we are expecting more upside to take place from these levels to new all-time highs. Okay. Alternatively, what the market can do, it's a short-term double correction, which is possible to do something like that. Spend some time before it moves to the upside. This is another variation, or alternatively, it could also do something like that, make another fake spike to the downside before it turns to the upside. So overall, we are still looking for more upside for Bitcoin, and the bigger cycle hasn't ended yet, and it should remain supported over the next couple of months overall until it reaches a specific level. Of course, if you want to learn more how we keep track of the market in full detail, we do have a service that you can consider joining. As I said before, the best value you get it as a premium member, because you get additional information plus Monday to Thursday 4 live analysis sessions, which usually takes 1.5 to 2 hours time. And we take each individual questions as well, one by one, for all the members. So for Bitcoin, for us, we are not speculating intraday anyway. This is something that we only consider with an investment bias, and there are many more things in crypto that people are not aware. So for Bitcoin, it doesn't really matter for us. The market should remain bullish for this cycle, and the cycle hasn't ended, the one that started in late 2022. For the SPX, S&P 500 cash index, we have explained over the last weekend's market update that we expected new all-time highs again. We have got exactly that. And we can still see more upside still to take place from this cycle from the 19th of April, and from this one from the 31st of May. So we can expect to see another push to the upside in the beginning of the week, and then the market can get into a choppy consolidation phase for a possible one more high later on, and then we can get some sort of a pullback. But of course, we are not looking for any buy setups at this stage, because the buyers entered from here and from here. If you haven't bought from here and from here, you are doing something wrong. And in this case, you can consider joining our service, and we can help you out to explain to you when you should enter the market and when you should just wait and see. At this stage, we are extending higher, but very soon we should get a reaction, and this is very dangerous for the people who chase it higher and higher. There is no real value to the upside at this point, and it's much better to stay patient, and at the same time, do not try to sell these indices. They are very bullish, and they can be very dangerous trying to sell any push to the upside, because first you need to have a valid setup with certain conditions to know when you can expect a pullback. So for the time being, one more high is expected. Then we can enter some choppiness for another push higher, and then at some moment the market can give us a pullback, but we are not there yet. So this is the forecast we can see for the SPX. And concluding our weekly market forecast, as we usually do with our two ETFs, the 3Qs and GDX. Here are the 3Qs. As we explained last week, we expected to see more upside, which is exactly what we got, and this is very similar to the SPX. Buyers entered from here and from here, and now we can still see one more push to the upside is likely. We might get a small pullback for another push to the upside, and then the market can give us a reaction and take from there something like that before a bigger pullback to take place. But for the time being, the market should remain supported for the short term at least for another high. Whether we will get a small pullback and then make another high, then the market can give us another reaction, something like that, which means it's very dangerous to chase it higher and generally to look for any trades at this stage, because anything is possible. We would rather wait and see a bigger pullback and try to buy it later down the line. Now for the GDX, we have reached a Fibonacci extension area of support over here, and the market is getting ready to make a push to the upside for at least a retest of these highs over here. But ideally, we expect new all-time highs above 39. And let's see what the market will do. This is the gold miners ETFs for those who don't know, and this is very relevant to the cycle in the metals, and especially the one for gold. So if we are going to break above these highs, then gold will definitely do that as well and exceed the 2500 area later down the line. So hopefully you have enjoyed. Thank you for watching another video. If you are new here, consider subscribing. Leave us a like, so share it with other traders so we can help other traders out if possible. And I wish you a great rest of your weekend and a great trading week to everyone. If you have any questions, leave them in the comment section or directly contact us at support@ROI Forecast. Follow any of our social pages down listed below in our description, and we will see you in the next video. Take care.